Good day to all. I am CA D.Murali, a AMFI registered mutual fund distributor and founder of DHARANI Finance, yet to be registered as a SEBI registered investment advisor in the near future. Today we are going to analyze what is working capital, that concept which is most important for every kind of business. In this video, analyze what is working capital, what are its components, how to plan the correct working capital for a business so that the excess fund will not be blocked there. All these principles and all we are going to see the simple manner. What is working capital? Working capital is the money should be available for running your day-to-day business. See, for any business, they have to make these sales. To make the sales, they have to produce and they have to distribute. They have to produce the goods and they have to sell the credit and all. And in service industries also, they have to render these services. To run the day-to-day operations, we need certain capital. That is, technically, it is the excess of the current assets and the current liabilities. Capital is to be financed by short-term funds. Components, what are the components of the working capital? Working capital consists of the, for our control purpose, working capital is divided into two. First is inventory, receivables, prepaid expenses, and the balance of the cash RCC available with your bank. What are the current liabilities? What are all this inventory and the receivables? And outstanding payments, including bank interest. So this is the cycle over which our day-to-day business is operated. There is two situations. In case the working capital is very less in our business, then what will happen? It will we will feel hand that we will not be implement our operating plan. Get very good orders, but we may be in a position that we cannot purchase the inventory or we cannot invest in the working capital. So it will lead to cash crunch and a lot of problems. Okay, so the ROI, the return of investment, everything will get affected. So maintaining the adequate working capital is very much important. Okay, what will be the situation? Capital. Excess working capital also equally dangerous because opportunity cost you are missing it. What is required to be invested in working capital is to be calculated, and to that extent only you have to invest in working capital. If you are maintaining as a safer zone excess working capital, that also will lead you not the correct usage of your funds. Okay, then excess as well as inadequate, both the things are to be, and we have to avoid it. Okay. Then what are the factors? See, now we have to work out what is really required as the working capital for the business. How to avoid it, how to calculate it. First, let us understand what are the factors that affect the working capital. First, the nature and size of the business is deciding what is the required amount of the working capital. In case of trading or service industries, working capital requirement may be less. but there also is requirement is there. But in respect of industrial units, inventory like raw material, work in progress, finished goods, and also in the data we have to invest. So industrial units or manufacturing companies requires a good amount of working capital that also is to be computed principally. So for the purpose of calculating the working capital exactly as per the requirement of the business, is fixed and variable. What is a fixed? Fixed is the necessary amount that should be decided based on the various factors available for your business. It is called fixed working capital. So this is the minimum working capital that is to be necessarily we have to prepare in our business, okay, in our industry. And variable. So suddenly some kind of situation, say we are getting the new orders which has to be faced on an immediate basis. Like there are situations which are not happening naturally. Those things and all is to be financed by the working capital. That we are segregating as variables. This aspect we are segregating the working capital into these two because we will be able to exercise our control on the variable overheads. Okay, now how to determine the working capital? What are the factors to be considered for deciding the correct amount of working capital for a business? It depends various determinants are there. What is our production policy? What is the seasonality of the business? What is the manufacturing process, whether it is a long term, like a contract lead time. So they have to have a working capital at a higher rate and recovering the investment of the working capital in the production process is to be calculated so that our profits would not get affected. Growth and the expansion of the business. See, when we are getting more and more orders and we are able to expand our business, there we are finding the new area of new product development. All such things and all will lead you to the increased need of growth in the working capital. Price level changes. So operating efficiency of a firm is fully related to its optimal utilization of the resources available in any form of production. Okay. A business is to be successful, all these things, all the resources that are available should be taken into account. For example, labor, capital, machineries, all these infrastructure factors and all we have to, resources available we have to calculate, we have to be aware so that these factors would be utilized fully. For the purpose only, we are computing the working capital by taking all these factors into account. How to estimate the working capital? Working capital mainly depends on the operating cycle of the business, credit terms, what we are offering, as well as what we are getting, and the stock holding period. Okay, so companies they have to calculate the projected current assets and liabilities to decide the required working capital, which should be optimum and which should not be excess and which should not be inadequate. So this how to compute the working capital, all these technical details we will study in the part 2 of this working capital management. Okay, thank you for watching. If you found this video helpful, please like, share and subscribe to DHARANI Finance. Thank you all. Good day.